Imagine you're a kid at a birthday party. There's a table full of cookies. A grown-up walks up and asks you a weird question. Hey, how many cookies do you think you could eat in one day? If you say, I can eat 2, they smile politely. If you say, I can eat 50, their eyes light up. Not because they care about your happiness, because now they know how much they can tempt you. That's exactly what banks do when they ask, "What's your annual income?" It sounds like a normal question, like they're just updating your file. But the truth is, when you tell a bank your income, you're not helping them serve you better. You're giving them a number that helps them.
Decide how much debt to offer you, decide which fees to push, decide what offers to show you, decide how hard to market to you, and sometimes decide how much they can charge you because they think you'll tolerate it. Today, I'm going to show you why banks really want your income, what happens behind the scenes when you type that number, and how to protect yourself without lying or doing anything illegal. And I'll explain it so clearly that a 10-year-old could repeat it at dinner and freak out the adults in a good way.
We're going to use 3 simple characters. Elon, a normal person who just wants to pay the bill and move on. Alice, a freelancer with income that goes up and down. The bank robot, not a villain with a mustache, just a machine that follows one rule: collect data, predict behavior, maximize profit. Let's begin.
Last month, Elon logs into his credit card app to pay the bill. He clicks Pay Now. But before he can even touch the button, a pop-up blocks the screen. Update your annual income so we can serve you better. There's a neat little form. Old income already filled in, a blank box asking for the new number, and a friendly button that says Submit. It feels official. It feels routine. It feels like just do it so the app stops bothering you. But Elon closes it. Because Elon knows something most people don't. Banks are very careful with words. They rarely say, "We require your income." They usually say, "Please update your income. Help us serve you better. Confirm your details." That's not a law. That's marketing. It's a request dressed like a requirement. Here's the simplest way to explain this to a kid. Required is like a teacher saying, "Put your name on the test." You have to do it. Requested is like a kid saying, "Can I borrow your toy?" You can say yes or no. Banks love when adults forget the difference. Because a customer who thinks everything is required is a customer who gives away data for free. And here's a powerful truth. In most everyday credit card situations, banks are not legally required to know your income. They want it. They don't always need it. And want is not the same thing as must. Picture the bank like a school with a magical sorting hat. You walk in and the hat says, "Tell me your income," and the second you give the number, the hat throws you into a category. Not a category like good person or bad person. A category like, how profitable are you? How much can we sell you? How likely are you to carry debt? How sensitive are you to fees? Will you complain if we raise your rate? Will you shop around or stay loyal? This is what happens in real life. When you submit your income, algorithms start running. Behind the scenes, the bank uses your income to adjust your credit limit, your offers, the products they push, sometimes the price they think you'll accept. You don't see the algorithm, but you feel it. More pop-ups, more special offers, more pre-approved messages, more pressure. Banks often say a higher limit is a reward. But think of it like this. A credit limit is not free money. It's like the bank gives you a bigger shopping cart. A bigger cart doesn't force you to fill it, but it makes it easier. And here's the uncomfortable truth. Higher limits often lead to higher spending. Not because people are dumb. Because humans do a thing called spending to the edges. If your limit is $2,000, a $900 balance feels big. If your limit is $30,000, a $900 balance feels tiny. Same $900. Different feeling. So the bank gives higher earners a higher limit, and many people think, wow, they trust me. But the bank is thinking, if we give them more room, there's more chance they'll carry a bigger balance and we'll earn more interest. A bigger limit can be useful for emergencies, travel holds, business expenses, or dangerous if it makes you normalize bigger monthly debt. The limit isn't a trophy. It's a tool. And sometimes it's a trap. Most people assume more income equals better terms. Sometimes that's true. But sometimes the bank uses your income differently. They ask, how likely is this person to notice a bad deal? Child-friendly example. Imagine two kids buying lemonade. Kid A has $1. Kid B has $100. If the lemonade costs $2, Kid A says, I can't. Kid B might say, sure. Now imagine the lemonade stand owner thinks, Kid B won't care if I charge $3 instead of $2. That's the idea. Some banks do something like this. They realize higher income customers sometimes don't negotiate, don't switch providers, don't sweat small percentage differences, so they price based on what you can tolerate, not what you deserve. That's why income can become a signal that you can be charged more, not because you're risky, but because you're comfortable. Once the bank knows your income, the app can turn into a video game, except you're the one getting attacked. Every login becomes upgrade to premium. Add another card. Try this loan. Try this insurance. Earn points, pay $550 a year. For higher income customers, it's often premium cards with big annual fees, travel perks, luxury branding. For lower income customers, it can be worse. Quick cash offers, debt traps disguised as help, balance transfers with hidden fees. Either way, your income helps them decide which hook to use. Same fisherman, different bait. Here's something most people never think about. When you tell the bank your income, it doesn't vanish. It sits in your profile. It can influence decisions later, like whether your limit gets cut in a recession, whether your rate gets raised, whether you're offered certain products, and even if your life changes, that old number may still be shaping your bank identity. It's like giving someone your old school photo and they keep using it to judge you for years. Let's keep this honest and clear. There are times you must provide income and proof. For example, mortgages, they verify pay stubs, taxes, employment, many auto loans, certain large loans. That's not optional. And honestly, it's a good thing. That's part of why no income verification lending caused chaos in 2008. But those pop-up update your income screens on a credit card app? Usually optional. They just don't want you to realize it. Let's be crystal clear. I am not telling you to lie. Lying on credit applications can be fraud. This video is about something totally different. There's a difference between lying and declining to volunteer extra information. If the bank asks you to update income and it's not required, closing the pop-up is not illegal. It's privacy. It's you saying, I'll share what's required, not what's convenient for your algorithms. Here's a simple explanation. Imagine you're playing a card game. The bank can see your cards, your moves, your habits, your reactions, but you can't see theirs. That's not a fair game. Banks already know a lot. Where you spend, how much you spend, whether you pay late, how much you carry month to month. When you also give them your income, you hand them an extra card. And the more cards they have, the easier it is for them to play you. Giving less optional data is one way to make the game a little more fair. Now let's talk about Alice. Alice is a contractor, a freelancer. Some months she makes a lot. Some months she makes less. When she first applied for her credit card, she reported her income conservatively. Years later, she saw a message. Update your income to process a credit limit increase. She typed her new, higher income. At first, she thought, nice. They're offering me more. But then within a few months, non-stop calls about personal loans offers shifted to expensive premium cards, more pre-approved debt products, more pressure. What happened? Alice didn't unlock better service. Alice got reclassified. She became a bigger target because the bank system saw fresh data, higher income, higher lifetime profit potential. So Alice stopped updating. She ignored the pop-ups. Over time, the pressure reduced because the machine stopped getting fresh fuel. That's how these systems work. Fresh data wakes the machine up. Here's a simple decision chart. 1. New credit card application. You'll probably have to provide income. But be intentional. Report accurately, don't overshare details you don't need to. 2. Random pop-up asking you to update income. Ask, do I get something I actually want from doing this? If no, close it. 3. Credit limit increase offer. Ask, do I truly need a higher limit? If you need it for travel, holds, emergencies, business cash flow, then updating might make sense. If you don't need it, don't give extra data just to enable more spending room. For loan, mortgage, where verification is required, provide what's required, nothing more. Here's the best long-term strategy. If the bank has less income data, they rely more on what you actually do. So your best profile becomes paying on time, keeping utilization lower, staying consistent, not living on the edge of your limit. Behavior is harder to fake. And it's the one thing the bank can't get from a cute pop-up form. Let's make this fun. For the next 30 days, do this. The pop-up pause if the bank asks for an update, pause and ask out loud. Is this required? What do I get if I do it? Who benefits more, on me or them? If the answer is them, close it. And notice something important. Nothing bad happens. Your account still works. Your card still swipes. Life goes on. That's how you train your brain out of automatic compliance. Banks are not magical helpers. They are businesses. They provide useful services, yes. But they also run systems designed to maximize profit. And in 2026, the most valuable thing you own is not just money. It's data. So here's the rule to remember. Provide what's required. Protect what's optional. Don't feed the machine unless it benefits you. Next time you see update your income so we can serve you better, you'll understand what it really means. Give us fresh data so our algorithms can optimize you. And you don't have to play along. If you want more simple, family-friendly videos that expose money tricks like this, hit like, subscribe, and comment one word. Privacy. And tell me in the comments. Have you ever updated your income and then suddenly got spammed with offers? I read every comment. See you in the next one.